Good morning and welcome to Market Mashup, our weekly recap of financial markets and what we have in store this week in terms of data points that could have an impact on stocks and bonds. I'm Scott Nasca, President of Generation Capital Management. I hope everyone has a great week. Last week it was a tough week for markets. We had the Dow Jones down 1.2%, the S&P 500 down 1.4%, and the Nasdaq was down 0.9%. So tough market all around in terms of people looking out to buying stocks. In terms of bonds, our 2-year yield is at 4.67%. The 10 years at 3.87%. So roughly about an 80-point spread between the 2 and 10, with the shorter end higher. So we've got an inverted curve with U.S. Treasuries right now. And like I said, keep an eye out on that because we do as well, because it's important, because that usually will give an idea in terms of the economic activity. And when we see inversions like we see now, we tend to have economic slowdowns and most likely recession. So playing forward, so you want to keep an eye out for that. The market is definitely telling us a lot of information just based off of the shape of the yield curve. We do have a couple earnings this week you want to pay attention to. Home Depot and Walmart will be coming out, and that's something you want to keep an eye out for. It gives another data point for the consumer to see if the companies are, seeing any slowdown in consumption by the consumer, in terms of everyday purchases or in terms of home renovations with Home Depot. So, get an idea to see if the consumer is still picking up the pace in spending, or if they're starting to see some slowdowns, and that could, show signs of weakness in the economic front. We also have some data points coming out this week that, the Fed's minutes are coming out on Wednesday, for their last meeting. We want to give an idea, see if there's any type of indication or change that's going on with their view in terms of interest rate forecast. We saw a big move in the bond markets over the past few weeks, basically pricing out that there's going to be a slowdown or there's going to be a rate, interest rates going down later on this year to more of a, increased hikes. So it's been a significant shift in change over the past 2 weeks or so regarding interest rate moves and what the Fed's going to do going forward. We also have the PCE inflation coming out on Friday. You want to pay attention to that because the Federal Reserve absolutely will. It's one of the gauges they like to look at for really dictating interest rate policy. So you want to definitely take a look and see if any news comes out there, if the data point is hotter than expected. We just did have a CPI that was a little hotter. So we want to see if that's coming through in the PCE side. We also had the PPI that was a little hotter too for inflation. So we've had 2 or 3 data points so far that were higher for this month. We want to see if we, get the trifecta here with the PCE coming in, if it's coming in hotter. So pay attention to that as well. If you have any questions, feel free to check out our website, www.gencapmgmt. Continue to have a lot of information in terms of our views on the markets. Be happy to take a look, give yourself a second opinion in terms of your portfolios. Be happy to provide any input. Maybe make sure that they're meeting your goals and objectives going forward, and you've got the proper risk tolerances. It's going to be volatile. That's basically what we saw last year. I think we're starting to see it this year. 2022 is definitely going to be more volatility in the stock market and higher interest rates in the bonds at this point in time. So, take a look at our site, check out our blog posts, our videos that we have. John's Top Tips is another good thing that comes out with financial planning ideas. So please reach out to us. Be glad to help out any way we can in terms of meeting your goals and your future needs. Once again, my name is Scott Nasca, President of Generation Capital Management, and this is Market Mashup. Have a great week, everyone.